Hello and welcome to Crypto Weeklies. Today in this video we are going to discuss about AAVE's price forecast using machine learning techniques as well as regression based overvaluation undervaluation. So currently while we're discussing AAVE, over the last 7 days the price has appreciated by about 32%, market cap slightly under 2 billion, price at around $126, circulating supply at around 14.9 million. This particular crypto did have a 15 million max cap. Now it's the total supply is at around 16 million with a with no max cap or max supply. Again, if you were to ascertain if there is an impact of token inflation in terms of price versus market cap growth analysis, per the last 1 year the price grew from $55 to $127. That means did a 2.5x, whereas the market cap grew from $700 million to about $1.66 billion. So again, similar to 2.5x growth in market cap and price. That means the impact of token inflation has been minimal. If you could toggle between these two charts, they are identical to each other. That means the market cap growth is getting reflected in price, which is one of the primary analysis to conduct before investigating anything further, because unless you are staking and if there is a huge amount of token unlocks or dilution due to rise in circulating supply, that means and that particular crypto would not be a good buy. Again, this is not financial advice, this is just historical trends in the crypto market starting last 3 to 4 years, where we have seen lots of crypto, not AAVE but other cryptos, where token dilution taking all of the gains with them and leaving very few gains for the token holders. So with this in mind, again we'll conduct the machine learning based forecast for AAVE now that we are in last week of August, or the third week of August, which will end in on 25th of August. The price action at a base case level forecasted by our model is between $114 to $135. That's the week by week price translation. You can check that out on the table below. These charts are available on cryptoweeklies.com. You don't have to sign up or pay for anything. The bull case for AAVE, again, the price has appreciated by a lot since July 2024. Again, quite akin to the DeFi summer of last year, where the last market cycle. Now the bull case scenario for AAVE is between $147 to about $560. That's between now and first week or the end of January 2025. If you were to focus till the end of year, the price forecast is between $147 to about $450. The bear case scenario for AAVE is between $56 and $108. We'll analyze a little bit further about the regression based valuation for AAVE. The current, if you were to believe that the prices especially starting early or mid 2024 are in a downturn, this is a key level to watch. Again, this is a 2 standard deviation ceiling. The price has a 95% chance to correct back to the fair value. The fair value per this analysis for AAVE is at around $78. This is again, you can see that there are non-linear relationship between time and price. There are phases where prices goes up with time and there are phases where prices go down with time. Again, these phases are quite interesting, because again no one can predict the overall trend of the market tomorrow or like 6 months in advance. Again, you can have your own theory based on market cycles as well as historical data that the prices are in an uptrend. Again, there is an evidence to support that the prices, especially since late October of 2023, are in an uptrend. But for this analysis at this point, they are having a downward bias. That doesn't mean that if the prices were to go up, these bands will not change their shape, because there is an evidence that up until starting early March of 2023, up until March of 2024, the prices were in an upswing. Again, that's just a reality. Again, if you were to look for the 3 standard deviation ceiling, which becomes more and more key right now, is at around $161, and if there is a pullback, the $99 would be key level to watch. If you were to extrapolate the behavior and check the simple moving average based valuation for AAVE, not IOS. For AAVE over here, the SMA based model, they say that the current risk level for accumulating AAVE is at around 0.46. That is again between this is the fourth or 1 2 3 4 fifth base time to dollar cost average AAVE per this model. Per the DCM model though, you can see that this model has printed a risk level of 0.86. That means this is a good time to get like the third best time to get out of the trade per the model. But again, whenever the risks go up to this peak regression, they have a tendency to go slightly above it. So I'll keep on if I were you, I would keep on looking for some evidence to suggest that if the rally were to continue, what could be a theoretical peak. One peak that comes to mind is about this $200. So that is a key level to watch. Again, in terms of the time weighted average price, you can see per this analysis AAVE is still undervalued, because the time weighted average price for AAVE is at around $151. And if you believe that AAVE would participate in the upcoming bull run of 2025 and potentially 2026, this is still if you have a longer term outlook, this is still undervalued zone for AAVE. And if you were to again to summarize everything related to AAVE as well as the wider crypto market, this PeakValley dashboard helps understand and put everything in perspective. The latest risk score are again down here at between 0.18 risk. We are nowhere close to the peak risk levels between 0.4, and again when the color code shifts from orange to red, again at 0.75 risk level. The highest that for this particular bull run, the risk levels went were at around 0.37 when Bitcoin first put its all-time high at around 73k. So that's where we are in terms of the run. And if you were to look at some of the summarized view of the market, again the SMA based risk analysis, again that also points to a current low risk regimen, where again this is analysis of Bitcoin and ETH, but that also means that this is analysis of 60 to 80% of the wider crypto market, which is again down here in terms of its risk at between 0.2 and 0.4. So with this, again the alts tend to follow the risk of Bitcoin and ETH. That means alts are also somewhere between this 0.2 or between 0.2 and 0.6 risk. Alts tend to be more risky than Bitcoin and ETH, but again nowhere close to the blow off top. So with this, I would like to conclude the video. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.